On today's daily financial news, which if you want to go check out, which will be June 1st, we talked about a Redfin article that highlighted that investors are fleeing the real estate market. This is something that the doomers and crash bros have picked up on, again, because 41% less transactions by investors year on year. So again, I will talk about what I think is really going on. But what I wanted to do is reach out to the boys from Convoy because they are actually in the business of supporting investors, mom and pop investors. And I wanted to have them look at their book of business now versus last year. Because again, last year, the market was very, very different. So Dustin, thank you for being here. Thank you for being here from Convoy Home Loans.
Thanks, Mike. How are you doing?
I'm doing well. So I think you saw this article as well. It's really eye-opening. It's really catchy. Investors are fleeing the real estate market, but you are in the business. You get a lot of investors coming to you to get loans to buy properties. So I'm curious, is your business down 41% or what's going on?
Yeah, I think it was 48 point whatever.
Oh, 48.
So 50, which is not that much different, but if you're saying 50%, they're comparing Q1 of 2022 to Q1 of 2023, right?
Correct.
And I think you got to look at it from a bigger macro scale in that there was a lot more people that may not be your, let's say, experienced investor, but more first-time investors that were looking and actually buying, maybe buying your Airbnb that was so hot at the time, maybe buying, one where rates were, at 4.5 or 5, full January of 2022, right?
Sure.
There was a lot more, let's say, competition.
Yeah.
And that, at least on our end, we haven't seen, because the people that we deal with, maybe 95% of our clients are investors. Okay.
Right.
And when John and I saw this article, it was actually late last night, we were like, we had a really good month in May in terms of the amount of, offers we were getting accepted for clients. So we broke down, when I say really good month, they actually had the most amount of offers accepted for Convoy's clients. Okay. And these
I want to say that another way. In Convoy's history, you had the most accepted offers for your clients last month.
Correct. These are purchases, right?
No,
now, maybe that could be skewed because we were doing way more refis 2 years ago. So the amount
that's a record, man. I mean, let's just own that. Again, so I have my thoughts, but I will hold them back for a minute. So share the data, because I know you and Jonathan put this together. What did you see in your book of business? Because again, a record month is a record month. You can't, there's no other way to spin that.
Well, thank you. We'll take that. So these are going to be rounded up or down a little bit, give or take. But in terms of the amount of offers that we got for our clients, or our clients got, better said, 37% of them were below asking. Okay.
Good. Yeah. That was not the case last year. I promise you.
No, I don't think it'd be
single digits. Single digits, single digits.
The amount at asking or within 5 or 10,000, because I'm not going to call it below or above, was at 52%.
Okay, so 52% plus 37 is 89% of loans at or below asking. Again, I would argue very different market than last year.
And then obviously 11% were above, but this is over all 50 states. Take that with a grain of salt, even though we, mainly do most of our business, or the most amount of businesses in, Southern California where we're located. This is taking numbers across all 50 states.
Yeah. So again, I love that. Again, what I hear happening today versus last year is the investors that are doing the work, the investors who are writing great offers, the investors who are getting deals below asking, they're doing the work and getting the deals. What we were seeing last year was FOMO, overpaying, bidding wars. There's also one more caveat that these doomers don't talk about. Let's rewind the clock 12 months and have an honest discussion about large institutional buyers of rental properties. Last year, even though some of the big boys were getting out of the market, they were still buying REDFIN, Zillow, the iBuyers. The iBuyers are buying 90% less this year than last year. That is going to be a large reason for the drop. Second, as you pointed out earlier, Airbnb has gone from the can't miss to the ooh, that hurts scenario. So again, less people doing that. And the biggest sin of doomers who are talking about a 48% crash in real estate investor transactions, the market is down 41%. It is so intellectually dishonest when these doomers pick out one variable and then they try to scream it from the hills. There's an old study I heard in college when we were talking about causation versus correlation. I don't know if you heard this one, but I want to share it with the audience. So in the 1980s, New York City was not the New York City we do today. It was crime. It had a drug problem. It was rough. Somebody did a survey that showed that when ice cream sales go up, the murder rate goes up. So maybe we should stop selling ice cream. No, you jackass. It's the summer and people are leaving their windows open. It is such these doomers take one little variable, they package it up in this pile of BS, and they feed it to the sheep who just follow in this flock and don't do anything. The only person getting rich is the doomer content creator. All the sheep are being fed BS, and they're going to be left to the slaughter. It is so sad. Lift your head up, sheep. Do your own work. Yes, it's tough out there. Yes, getting great deals is hard. But if you just stay sheep, you're going to get slaughtered. It's just crazy.
No, I mean, I see so much of that on, the internet or social media, and you call them the doomers. Like when you think about it, they're trying, like you just said, they're trying to generate as much attention, clickbait, whatever you want to call it, just to make them more profitable, more famous, more followers, whatever you want to call it, more likes. Because that's the hot topic that everyone's afraid of. Nobody wants to talk about doing the hard work. Nobody wants to talk about how much different it is to get a great deal than it was a year ago. It's just easier to say the sky is falling, and that will generate, the most amount of ads or clicks, whatever you get,
the only person that helps with doomer is the content creator. I know there's some doomers in the real estate space making 80 grand a month on sheep. I think it's sad, but hey, good for him. He's a genius. He has tapped in to feeding BS to sheep, and the sheep will get slaughtered, but he'll make money. So I hope he feels good about that. At the end of the day, I love that Convoy Home Loans is part of One Rental at a Time, because you get people that do the work. They bring you opportunities. They don't always work out. You have told many people that's a skinny deal. Don't do it. So if somebody wanted to reach out and talk about getting a deal done, what should they do?
Yeah, just go to our website, convoyhomeloans.com. Mention you came from ORAT. That way myself or John can help you out.
Again, folks, you got to mention you came from ORAT. If you want to work with the two guys that I talked to, that's how you do it. Thanks, Dustin.
You got it.